Hello, 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 everybody. It's your boy, Sean McLaughlin at Options Sean on Twitter X. Today is Thursday, February 13, 2025. Hope you're having a good morning for those of you not on the East Coast. The rest of you on the East Coast, good afternoon. Hope you're doing well. We're having a good day today. For those of you who have been hanging around with us for a little while, you know we got a couple trades that having a really nice day today, which we will talk about. But before we get into anything, before we get into charts, let me just drop the old disclaimer here that everything we talk about here is for educational purposes. I'm showing you what I'm doing with my money, and I hope that you learn something along the way. Now, also, let me just, I don't usually do this at the top here, but for those of you watching on YouTube, I want you to go into the YouTube chat and you'll see I got a sign up for a free e-letter there. This is my e-letter. I send out notes almost every day, not every day, but most every day. Some are educational, some are teaching a lesson based on a past trade that we've done on. Some are anecdotal. More or less, it's stuff that we traders, whether you're an options trader or not, we can all relate to. It's absolutely free. So please do me a solid, sign up to receive that e-letter and let me know what you think of it. You know, you could always reply to my emails and give me your food for thought. I would love to hear from you. I love engaging with people who would engage with our content. Okay. So let's oops, that's not what we want. We want to go here. Let's go to the charts. So before we get into individual stocks, let's just start at the high level here. Let's start with the S&P 500. As you can see, regardless of what the cable news will tell you about how the world is going to hell and all the scary headlines out there about the tariffs and the war and the Trump and all those things that's got everybody worked up. Regardless of all that, the S&P 500 continues to sit within a whisper of all-time highs. Now, if you, like me, well, no, I still read some, but if you were someone who does not read the news, does not watch cable news, does not read the newspaper, does not doom scroll on Facebook or Twitter, if you were just, living on your own and living a quiet life, and you looked at this S&P 500 chart, you would say, everything looks good in the world, at least in the US. Everything looks great, right? It's just a reminder. There are a million reminders, but this is just another reminder that as an investor and as a trader, only price pays. Okay. If you're selling stocks, if you've been getting bearish, taking aggressive bearish bets based on what you think is going on in the world, you're not making any money. In fact, you might be getting your ass handed to you. So look, I don't get involved in all the stuff, all the politics. I don't care. None of it matters to me. As a trader, I'm just following a price. And the S&P 500 is telling me that we are still in a bull market and we should be acting accordingly. So speaking of bull market, let's talk about some bull market action. So what we do here in the All-Star Options Jam session every week is we talk about the high level market, which we just did, and then we dig into any action amongst open trades in the All-Star Option service. We don't talk about every open trade. In fact, if you look at my screen right now, on the right-hand side, you can see a bunch of ticker symbols. These are all ticker symbols I have positions in right now. We're not going to talk about all of them. We're just going to talk about the ones where there's been some action this week. So let's open up the recently closed positions, and we'll save the best for last. But let's get the well, there is really no bad. There's no bad news, but let's talk about a losing trade. We'll talk about this one first on semiconductor. This was a trade that actually went our direction. This actually went the way we wanted it to go. Unfortunately, it just didn't go as far or as fast or have as much follow through as I would have liked for us to earn our profit. So this was a bear put spread we put on semiconductor. We were long the February 14. So these are options that expire tomorrow. We were long the 50 puts and short the 45 puts, creating a bear put spread. Let me zoom in a little here so it's a little easier. Now, this was an earnings bet. Okay. There's a couple trades here we're going to talk about that were earnings bets. This was one that I was making the bet that upon the upcoming earnings event on semiconductor, was going to continue following through on the downside, as has been the trend all, for the past year. If I zoom out, look at this trend over the past year, it's just been nothing but down. And we talk about this all the time, but earnings surprises, if there are surprise moves, they tend to happen in the direction of the underlying trend. And so the bet was, once earnings came out, ON Semiconductor was going to continue lower. And it did. It actually did do what we wanted it to do. Unfortunately for me and for us, is that we had a profit target to sell this spread for $4. The most it could be worth is $5. I was willing to sell it for $4. I paid $1.50 for it. So if I was able to sell it for $4, that's a great return. Okay. Or if ON traded below 45, which is our short strike, I would have taken profits there. Now you might be wondering, well, look at this candle here. You can see that clearly ON traded below 45. Well, unfortunately, this is also showing outside of regular market hours. If I change my chart here just a little bit and turn off that, you will now see that intraday, the low price for ON was 46.57. So it never quite got down to 45. I would have taken profits at 45 if I could have. So it did not break 45 during regular trading hours, and it did not hit my profit target, or my target to sell the spread at $4. So unfortunately, due to the fact that these options expire tomorrow, we had a very short leash. So I had to trail a stop on this trade, and I trailed the stop against the previous day's high. And so on the 11th, which was Tuesday, the intraday high was 48.95. And then yesterday, intraday, we broke above that, and we're still above that right now. And so at that point, I closed the spread. I closed it for $1.26. So not a terrible loss, right? I paid $1.50 for it. I got out for $1.26. Not the loss I'm looking for, or not the result I'm looking for, but I mean, I'll take those kind of losses all day long. That's the name of the game, taking small losses. All right, so that's it for the bad news, okay? And the bad news isn't even all that bad. Let's talk about an adjustment we made. FXI. This is an ongoing position. We've been in this position since November 6th. We are long the January 2026 call. So we still have, 11 months until expiration. We have a long time, but we have short calls embedded in the position, a diagonal spread at the moment, that we keep rolling the calls to bring in additional credits to stay with the trade. Earlier this week, or in fact, yesterday, we rolled our March 33 calls that we were short. We rolled them up to the August 34 call strike for a 26-cent credit. And you can see here, November 6th is the day we put the trade on. It was a 248 net debit between buying the 35 calls with January expiration and selling the December 35 calls against it. You can see we've done 1, 2, 3, 4, 5 rolls since then, each time bringing in a credit. And each time we bring in a credit, that reduces our risk in the trade. Right now, you can see at the bottom, our current net debit in this trade is 90 cents. So it started out as a trade where we were risking $2.48. We're now only really risking 90 cents. And that's important because look, when we got into this FXI, we got in back in November 7th. And for the most part, up until recently, this trade has not worked. It's gone against us. But we've never been in a situation where we're down a lot of money due to the strategy we have here of rolling calls, collecting income against this position, keeping us in the game. And so we've never really been down big. The ultimate goal here is I'd like to maybe do a couple more rolls of these short options for a few more credits and get this current net debit to a small net credit, and then have whatever short calls I'm holding, have them expire worthless, leaving me with the January 2026 calls at no cost. And then it's a free ride from there. That's the ultimate goal here. We'll see if we get there. I don't know. We'll see. All right. So next up, IBB. This was an Iron Condor trade, a delta neutral credit spread where we were betting on sideways action. And at the end of the day, we got our sideways action, but it was not easy and it was not smooth. We got in here on January 10th, I believe was the date we entered. We sold the sorry, I don't have the details here. We sold the 145 calls and the 125 puts, and then protected it $5 away on each side. All right. We collected $1.75 when we put the trade on. And look at this, boy. My stop loss level that I put out in the detailed post detailing all the details for this plan. Sorry, that's a really redundant sentence. In the blog post that I published that laid out the details for this trading plan, I clearly delineated 143 as my level where I will stop out of this trade. If we saw a closing price in IBB above 143, that would invalidate my thesis here. That would tell me that we are no longer range bound. We are breaking out of a range. And when you're breaking out of ranges, you do not want to be holding an iron condor or any delta neutral trade. Delta neutral trades only work when the underlying instrument stays in a range. And so we got tested, boy. We got real close. I mean, on this day here on Feb 6th, we got an intraday high of 142.79. So we got within a kiss of that stop. Now, I would have waited for a closing price above 143, but still, we got really, really close. Thankfully, the market gods had other plans, and it quickly reversed for 3 straight days. And we got out on the 11th, which was Tuesday. And we got out at the price we wanted to get out. We closed it for 85 cents. And so, as is my best practice on iron condors, I like to close them when I can buy them back for half of what I sold them for, or approximately half. I sold it for $1.75, bought it back for 85 cents. So that's a winner. Put it on the board. All right. Now, the headliner today. The headliner. Look at this move in AppLovin, ticker APP. Let's zoom out a little bit on this thing. We've been in this trade for not very long. We got into this trade on January 23rd. And we got into this trade for a very specific reason. Like the ON Semiconductor trade, I was making the bet that the upcoming earnings release in AppLovin, if there were to be a surprise, I wasn't betting that there would be a surprise. I was betting that if there were to be a surprise, it will likely be in the direction of the underlying trend. And there is no denying that since last summer, AppLovin, ticker APP, has been on an absolute tear. And so I was not willing to make the bet that this was the top. All right. We had a big run here, end of the year. Then we just basically have been consolidating it ever since, while never violating the 50-period moving average. To me, that was incredibly bullish. And we bought a February 400-450 bull call spread, a very short-term play for us because we were looking to make our profits coming out of the earnings report, which we did. And so if you guys were paying attention in the chat yesterday, yesterday after the market closed, when the news came out and App was gapping crazy high, going into yesterday's close, I had a resting good till cancel order to sell this spread at $40. $40 would have been 80% of the potential full value of the spread. We were long the 400 calls and short the 450 calls. So the difference between those strikes is $50. That's the most this spread could have possibly been worth. And I had a limit order to sell it at 40. But yesterday afternoon, after the market closed, when the stock was trading north of $500, I said to everybody in the chat, I said, I'm going to cancel my good till cancel ordered to sell at $40 because I don't want it to get filled at $40 at the open tomorrow. Because if so, I'm just giving free money to the market makers. I wanted to wait for it to open, see where the fair value was then, and then work my exit. So I did that this morning. Within 3 or 4 minutes after the opening bell, I was able to get filled at 48.40, almost the full value of the spread, right? A wonderful home run. Not that bull call spreads are ever home run trades, but if there's ever anything that's ever as close to a home run trade in a bull call spread, this is it. So congrats to those of you who were in this trade with me. One for the good guys. Love it. And honorable mention, we're still in this trade, but we had a similar earnings reaction yesterday in Robinhood. We're long a bull call spread, similar type trade. Now, this was not an earnings bet specifically. This is a longer term trade. We still have until June for these options to expire. And as you can see, we've had a great post earnings reaction. We're trading north of 62 bucks right now. So our spread is fully in the money. But my resting order to sell this spread at 16 bucks, which is 80% of the potential full value of the spread, has not been met yet. But the good news is as long as Hood stays up here, north of, let's say, $56, which is just about where we closed yesterday. So as long as we stay above 56 bucks, then theta decay will be working in our favor in this position. It might take longer than we want, maybe. If Hood goes nowhere, if it just kind of hangs here for a little while, the theta decay will work in our favor, and we'll eventually get to our profit target trying to exit the spread at 16 bucks. Obviously, if Hood follows through and continues rallying higher from here, we'll get out of that spread sooner than later. But as long as we're above 56, we've got theta working in our favor, and I'm liking this trade. So that's an honorable mention on Hood. We're still in it. I was hoping maybe we'd get out this morning, but no such luck. All right. So that's it with our closed trades. That's exciting stuff. Now I'll just quickly work through some updated stops. We have 3 stops we're updating today. One is Cloudflare, ticker NET. Now, similar to that Hood trade, we are long a September bull call spread that also is fully in the money. We're long the 120 calls and short the 160 calls. You can see that right now the stock's trading at 173. We're fully in the money. So this is a position where we too are getting paid to wait while the stock and the position moves towards my profit target. The most this spread could be worth is 40 bucks. I'm trying to sell it at 32, which again is 80% of the potential full value of the spread. We're not quite there yet, but we're getting there, and we're getting a little bit closer every day. Every day that we're above, every day that we're above 152, which is right about here, then theta is working in our favor, getting us towards our profit target. So let's be patient. Let's stick with it. We got a lot of time, but I'm liking where we're at with this Cloudflare position. All right. And by the way, I'm raising my stop to 123. That's the whole reason we got here. I'm raising my stop to 123, which is pretty far away from now. I would hate to see 123 get challenged. But for now, we're leaving the stop at 123. We'll probably raise it more aggressively in the weeks to come. But for now, let's just leave it at 123. All right, next up, Visa, ticker V. We're long a call diagonal spread here. I'm scooching my stop up to 325. I think it was at 320 earlier. We're moving it up to 325. Gotta love the price action here. This is a call diagonal spread. So we're long the June 375 calls, but we're currently short the March 360s. As we get closer to March expiration, if Visa breaks 360, putting those March calls in the money, I will roll those up and out. So I'll roll it up a strike to the 365 strike and roll those March options out to either April or May, wherever I can do it for a credit to keep me in the trade. And I'll keep you guys updated in the All-Star Options chat room on that when we get there. All right, but for now, the stop on Visa is 325. Finally, AEM. Now, we've got earnings coming up in this name. I believe we have earnings coming up tonight. So worth paying close attention to. This also is a call diagonal spread. We're long the January 120 calls, but we're short the March 95 calls. Actually, we've rolled them, so now we're short the June 100 calls. Excuse me. It started out as a March 95 calls where we were short, but now we're short the June 100s. We did the roll right here. Okay. We did that on the 5th. Yeah, we did that last week for a 5-cent credit, very small credit, not the credits we'd like to get, but it did reduce our exposure by 5 cents. That's not nothing. Okay. And you can see I got 102.50 highlighted up above there. If AEM breaks above 102.50, which it might happen following earnings tomorrow, then we will once again roll the short calls up and out a strike. We'll roll to, we'll see where the market is, but we'll definitely roll it up and roll it out, preferably for a credit if we can, unless we get some kind of wild earnings release tomorrow. We'll deal with it when we get there. But for now, I'm raising my stop to 86 right here. I don't want to see AEM get below 86. All right. Last up, I'm not going to get into the full details here. You can find the full details for these trades at allstaroptions.com. I'm sorry, allstarcharts.com. And you go to the members section, you go to the options section, you'll find detailed trade plans for every trade that we put out. So we'll just briefly get into these here. On Friday last week, we got into IBM, excuse me, on Monday of this week, right? What today's day? Yeah, today's the 13th. So on Monday this week, we bought the dip in IBM. You can see here, so far, so good. Yesterday, we got into ACN. This is Accenture. This is also a bullish bet. And bear with me, I'm going to look into the other screen here real quick. I feel like I'm missing a trade here. Let me just check my notes. Sorry, guys. Oh yeah, CrowdSource or CrowdStrike. Of course. We got into this one last Friday. Yeah, we got into this one on Friday. I should probably put my little circle in here. But the 7th right here is where we got in. So we are bullish CrowdStrike. And again, all the trade details for these can be found at allstarcharts.com. Head to the member section, head to the option section. You'll find all the detailed trade plans there. All right, guys, I'll just bring this slide up for everyone who likes it. Oh, the slide is gone. Gene, I apologize. My slide disappeared. Let me refresh my screen there. There we go. Not sure why my screen disappeared. We're having all kinds of technical difficulties at the moment. My computer's acting funny. All right, so forget it. We already talked about the trades. Here it is. Here it is, Gene. Sorry, everybody. Technical difficulty, and it's still not working. Okay. Oh, there we go. There's the updated stops. Take your screenshot. Oh. Sorry, everybody. You can see it there on my screen. I'm not going to touch anything anymore. You can see it right there. There's the updated stops. Ignore the Robinhood. Actually, no, don't ignore Robinhood. We didn't talk about that one. We're moving our stop in Robinhood to 46. All right. You don't see them, Gene? Okay, I'm having all kinds of technical difficulty. Maybe just go back to me, guys. Go back to me, Gene, my screen. I don't know what's going on with my computer. Definitely having a technical issue. But hey, thanks for tuning in, guys. We'll end it here. If you have any questions about anything we talked about, shoot me an email, info@allstarcharts.com. Happy to help you guys out. Any questions you have will get routed to me. And like I said at the top of the show, if you're not already subscribed to my free e-letter, please go into the chat there on YouTube and you can see the link. Click on that link and subscribe to my free note. It comes out almost every day. You will get actionable content. You'll get educational content. You'll get fun content. Everything under the sun. But it's all relatable to all of us who are options traders. So thanks for tuning in, guys. Sorry about the technical difficulties here at the end. I don't know what's going on. But hey, enjoy your weekend. If your weekend starts tonight, I know some of you guys like to take Fridays off. If you do, enjoy your weekend. We'll be back at it next week. Until then, take care.